Welcome back to Portfolio, everyone. And in this video, we're going over 5 Dividend Aristocrats you can buy right now and hold forever. These are solid dividend-paying companies that are seeing beautiful, consistent dividend growth for at least 25 consecutive years. And as a dividend growth investor, you love seeing that consistent cash flow coming in and that payment growing each and every year. And these companies have been doing that for a long period of time, through good times and through bad times. So in this video, we're going to take a look at 5 different companies. They operate in different sectors of the market who all have been paying that nice growing dividend for at least 25 years. We have a combination of some high yield, slower growth stocks mixed in with some lower starting yield, but rapid dividend growth plays each and every year. So we have a nice variety on this list, and we're going to jump through each and every stock, take a look at their price performance, do a quick overview of that dividend payment, and just discuss the dividend safety score for each different company. As you may know, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy, and we take a look at the overall stock market performance or any other big news in the stock market. And in this video, we're going to go over 5 Dividend Aristocrats you can buy right now. So hit that like button and subscribe, and we're going to jump right into the first stock on this list, which is Pepsi, a consumer brand well known all around the world. They own and operate various snack brands as well as their very famous soda line. Over the past 1 year, shares have barely moved, not even up 0.5% over the past 12 months. So if you were to buy in today, you are really getting in at the same price as 1 year ago. Over a longer term perspective, shares are up over the past 5 years around 50%. So nice, decent share price appreciation for this Dividend Aristocrat. So with a markup of $189 billion, this is a very large company. We take a look at their revenue. With this type of company, because they are so large, this is more of a slow growth company. This is slow, consistent growth year over year, and that is exactly what we are seeing from top line revenue. Consistent, slow growth, but continuous upward trend year over year. And if they take a quick peek at that dividend payout, a nice 3% starting yield for Pepsi with a payout ratio of around 76% of earnings. And they have been growing their dividend at an average rate of over 8% on average over the past 5 years, which is incredible. You're jumping in with a nice 3% starting yield with some beautiful dividend growth. If we take a look at their dividend safety score, coming in with a very safe rating at 93, this dividend is extremely unlikely to be cut anytime soon. And they have been growing that dividend for over 48 consecutive years, which means this company has a big long history of growing that dividend through recessions and depressions each and every year. So Pepsi, an investor's favorite, a very strong staple in a portfolio, and I own Pepsi myself in my dividend portfolio. Moving on, the second Dividend Aristocrat to take a look at right now is Abbott Laboratories, currently being traded around $106 a share. Over the past 12 months, this company is up over 25%. They've seen a nice surge over the past couple months from the March lows. But as of late, shares have been on a little bit decline away from their 52-week high, which might make this a nice buying opportunity. Markup of $187 billion, another very large company. With this company though, you are getting in at a lower starting yield, currently only yielding 1.36% on their current dividend payment, a payout ratio around 46% of earnings, and a 5-year dividend growth rate at 7.78%. So an average dividend growth rate, nothing too astounding right there, but a still nice dividend growth rate where your dividend is growing, beating inflation, and continues to give a nice increase year over year. And that dividend growth rate is actually incorrect. If we take a look at the company's website, they are posting 48 consecutive years of dividend increases. So this company has 386 consecutive quarterly dividends since 1924, and they have a streak of increasing that payout each year for 48 consecutive years. If we take a look at their dividend safety score, coming in at 71, this company is still considered safe with a dividend safety score above 70. If we take a look at the share price though, before we move on, over the longer term, they have a lot of share price appreciation. So up 144% over the past 5 years. So although your starting yield may be a bit lower, this is a company where they have a slow starting dividend yield, but their share price appreciation makes up and bolsters that total return. So you might be jumping in low, but you're getting to a solid Dividend Aristocrat that has been growing their dividend for a very long period of time, and they have beautiful share price appreciation of close to 145% over the past 5 years. Stock number 3 on our list is a dividend investor's favorite, which is AT&T, currently shy of $30 a share, coming in at $29.12. Over the past 5 years, shares are still down 10%. So if we take a look at the 12-month chart, a massive decline in the red. Since the month of March, shares have been hammered and haven't really recovered. On the 52-week range, very close to that 52-week low right now, with the market cap still above $200 billion, even when shares are being traded at this low point. This is a massive dividend yielding stock, currently yielding over 7%. AT&T is a dividend investor's favorite, of course, for that massive yield, their strong dividend history, and for the fact that this company brings in tons of revenue. Revenue is still on an upward trend. Even for a massive company with slow growth, this company has still been consistently growing revenue year over year, and they bring in tons of revenue each and every year. In year end 2019, they brought in over $181 billion of total revenue. Taking a closer look at that dividend, currently yielding 7.14%, with a payout ratio of around 65% of their earnings, and they only raise their dividend on average of 2% per year, which kind of matches inflation. Average inflation rate comes in at around 2% per year. So if you lock in that 7% yield when you purchase, your dividend is growing each and every year at the match of inflation rate. And if we take a look at the dividend safety score, coming in at 65, so still considered safe, so unlikely to be cut anytime soon, but not the safest dividend safety score on the market. And they've done a nice job of growing that dividend for 36 consecutive years. Once again, a company which has paid out and grown their dividend during good times and bad times. Stock number 4, another consumer staple, Proctor Gamble. This is a company that is beloved by investors. This is a buy and hold where you don't have to think about it for the next 15 to 20 years. Up 13% over the past 12 months, up over 100% over the past 5 years. This company with a market cap of $345 billion is absolutely large. Taking a quick look at their revenue, you can see here they continue to grow revenue year over year. Still a slight upward trend. Each and every year you can see revenue growing at a slow rate, but is still increasing as the overall company continues to grow. And with a company that is this large, this well diversified, that is what you want to see. This is not a company where we're expecting some massive double-digit growth year over year. Consistent growth over the long term is what you're buying into with Procter & Gamble. With this dividend, currently yielding 2.2%, with a payout ratio of around 58% of earnings. And you can see here, they only grow their dividend on average of around 3% per year over the past 5 years. So once again, not the best dividend growth rate, but at least your dividend is matching or slightly outpacing inflation each and every year. And if you take a look, a 99 dividend safety score. That is what makes this company extremely attractive. The highest dividend safety score you can get is 99, which shows this company is almost impossible for them to cut that dividend anytime soon. They have a dividend streak of growing their payment each and every year for over 63 plus years, which of course makes them a dividend king, and they have actually surpassed that dividend aristocrat status. But still, this is a company where they continue to provide results. They continue to grow revenue and income, and this company, the dividend safety score is so high at the highest possible rating, it kind of reassures the fact that this is a hold where you buy in today, you just set it and forget it and watch your share price and your dividend incomes grow each and every year. The final dividend aristocrat on this list today is one that actually doesn't get talked about too much. APD, Air Products and Chemicals. Over the past 5 years, shares are up 124%. Currently being traded around $304, this company has a smaller market cap compared to the others at around $67 billion, and this is a more low yield, faster growing stock. If we take a look at revenue growing each and every year, consistent upward trend overall on the long term. If we take a look at the dividend, currently yielding 1.76%. So of course that is a lower starting yield right now, but the dividend has been growing at a much faster rate. average dividend growth rate of over 10% over the past 5 years, which is beautiful, with a 64% earnings payout ratio. If we take a look at dividend safety score, coming in at 95. So another company where the dividend is growing at a very fast rate. Last year alone, they grew the dividend at a rate of 13%. So if you were to buy into this company right now, although you're getting a lower starting yield, you're buying into a company which, like all of these others, have a history of growing the dividend. The dividend is extremely safe, coming in at 95, a company where it's extremely unlikely that we see a dividend reduction or cut anytime soon, and the payment, although starting might be lower, has been growing at a very fast rate. So those were 5 dividend aristocrats, some more common than others, but all of these companies have a long history of growing that dividend. That is what dividend investors look for. They want that consistency and that growth year over year. They want companies that can withstand tough times, recessions, and depressions, continue to grow, continue to generate some income, and continue to grow that payment out to shareholders in the form of a dividend. So thank you for tuning in, everyone. Those were 5 dividend aristocrats you can buy and hold forever. Thank you for tuning in, and I will see you in tomorrow's video.